Holy macaroni. That was a wild one this morning, man. What a wild one. Absolutely insane. Monday trading afternoon. Yeah, sorry we're a little bit late today. I'm not gonna lie. I had getting ready for this trade. I'm like, here, I'll show you what I was looking at. Uh, what a crazy volatile market. Crazy volatility. That's all I'm going to say. This Monday price action, if you're not if you're not familiar with Mondays, I mean, number one, don't believe what you see on Mondays. if you thought it was just absolute shortness, like okay, crazy. Now it's consolidating. We had a little bit of a session gap. I'm just looking at this. The battle is on, man. The battle is absolutely on. This is a 30-minute chart for SPY. This is what I'm usually looking at. This is the setup on the charts where like every 30 minutes, it can look totally different. So, last week I was looking at this and I was like, it's probably not something I need to trade. Market went nowhere, absolutely nowhere. Huge flush down and then chopped basically all week to end exactly where we started. But that was a big move. So I still kind of feel like it's like we're in this chop zone, very much a chop zone. We're heading right into overhead supply. Guys, I'm just going to say it's close, but this is the question. Is it a bounce week or is the bounce busted? That's the question. I mean, we're like right there. So let me get out of this. Here's where I'm at. Welcome, guys. By the way, if you're new to the channel, appreciate you guys hopping in. We do have a group. Just it's over on that. I don't know, over there in the corner. Feel free to jump in, check us out. I know we got a lot of new people. I may or may not have Sharky today. I don't know. Let's see. You know what? I'm gonna do this. I'm gonna send a link. See if anybody wants to play in my back channel. Send it to a couple of our pros. We'll see. But yeah, this is a crazy week. So huge dump out of the gate last week. And we spent basically the entire week after Monday, just kind of like chopping around, figuring out if that was going to be it or if that was, just the beginning. And I think, after that kind of a move, it's not likely to have like a massive amount of continuation. Let me just move this down a little bit. And I feel like we're just going into this holding pattern. I was irresponsibly short and I sent it. Yeah, Spider, Insider, crushed it out of the gate. I mean, this was the chop, right? It's like all morning, I'm looking at this. I'm like, I'm not buying it. I don't know. It's too sketchy, really bad spot. And I'm looking at it. I'm like, I think it's going up, but I just don't trust it. And I was short. And I think you could have been long and or short today, and both sides. I mean, clearly, both sides would have won. Like this is, I want to say Monday, man. Monday, I'm just like, I don't believe this price action. If you're short, okay, cool. Then you're long, okay, cool. Then you're short. Look at these moves, though. These are moves that are definitely indicative of a VIX with a 20 handle. And that's where we are. So if you weren't around, if you didn't see it last week, this was Monday, 65 on the VIX. That was insane. Absolutely insane. I think that's higher than COVID. Oh, this is the last Volmageddon, 90, right? This is like COVID volatility right here. If you're around trading this, congrats, because it was insane. I was, and it was out of control. And we get these spikes in the VIX pretty like periodically, once a year, something like that. They don't last. I'll just say that they don't last. And my initial reaction is to instantly, boom, let's short it, right? When you have a spike like this, I'll tell you what, I did short it, and you would think that it was a great trade. Not really. Not really, because options were so freaking expensive. This is the thing. It's like I knew it would be expensive, but you know, it is what it is. It'll probably continue to come down, but likely to stabilize somewhere around 20. So I think a lot of people were asking last week, what do you do? And I may have mentioned this ticker called SVIX, SVIX. I think you could close that out now because I do think that we will kind of stabilize somewhere around 20 till the end of the year, really. And this will probably be the base. UVXY, I don't want to, you're just going to bleed out and it's going to continue to go down. Even if you're short on UVXY, I'll tell you right now, the volatility is still very, very, very high. It's not an easy trade. Even selling upside calls, if you can sell naked calls, it's probably it sounds crazy, but like the spreads were just out of control. One question, sir, when they say NFP level is from the high and low of the day or high and low of particular candle formation, what when the data comes up? Yeah, sure. Let's take a look. So last week, was it last week? Week before last, Friday. Non-farm payrolls come out every first Friday of the month. And this is that Friday. So here, if I'm looking at this, and I'll just play this, the market got the data at 6:30, 5:30 my time. That's 8:30 Eastern. The low in the pre-market is initially, and this is after the data. So after 8:30, basically, it spiked up to about 538.71 and then down in the pre-market to 533. But from this point, from 8:30 forward, that's when you start looking at the candle and then throughout the rest of the day. So the day plays on, we continue to go lower. This ends up being the high, which is at 8:30 in the pre-market. And then the low ends up being 528.60. So this right here box ends up being your NFP levels for the month. So what this means moving forward is that, so more often than not, what happens with this, so first of all, it's a fundamental event that will create a technical level. This is not like, this is, I'm just, Ava, tuning in from my dinner table. I love it. Throw us on the big screen. What happens, the fundamental event, this is the jobs report. Remember, jobs are extremely important overall for the market right now. And it kind of gives you the market a little bit of a preview into how much, let's say, money the consumer will have. And the consumer makes up about, I don't know, like 70% of GDP. So that's why it's really important for the month. And GDP, it's all backing into GDP, by the way, which is like what the Fed is targeting is this Goldilocks GDP moment. So Goldilocks for the market looks like 2% GDP and 2% inflation. We're not there. We've been trying to get there. But we could talk about that in a little bit. And we should probably talk about what kind of market this is because it's fluctuating. I think the market in general is in flux right now. So this is what that looks like. So what you do with this after you have it, essentially, if the market's trading over 538.71, and when I say trading over, I mean you need to see a full day open and continue to trade throughout that day over 538.71, basically the high of that day. And then you can think, okay, the whole market thinks that we're going up for the month of August. And as long as you're over that, you're definitely going up. Inside the box here, this is a chop zone. This is kind of like your no trade zone, or like you can trade probably level to level, if that makes sense. So it's always this level to the next level. And you'll notice I have more than just that 1 month's NFP on my screen, right? Because every time we get one, those levels stay constant, literally forever. And what this does is it creates these ranges for you. What's true is that if you're trying to trade off of them or with them, SPY will actually go through these levels very quickly. So if we saw like an open below 528.52, getting to 520.43, this next level down here, this move extremely fast. And a lot of this, you can get stuck in there, but between up and down, very fast. If you come back here, very fast to get there. So that's, as an options trader, also where we want to see where's the momentum going to pick up. So if you find like areas in the chart where you have big gaps, like in here, big gap, 506.97 brings us all the way back to May. There's a big 10-point drop in here. That's possible, but to get there, we have to get through many, many levels. So that's kind of like how you have to read this. But it's not inside the box. You're basically range bound, and that Friday's price action tends to be the high and or low of the month every month, more often than not. Like way more, probably like 80+%. Like for the whole month, that's the high and or the low. So if we've been trading below this 538.74 since this date, I can tell you that for a fact. So it would not surprise me that 538.71 becomes the high for the entire month. And we're barely like 10 days into the month. Unless we're over that, guys, I really, and this is what's keeping me behind. I can't think. So this system is not, I mean, it's not, look at how fast. So this is what I mean, how fast they go through these levels. This is quick both ways, right? You break a level to level. But for the broader trend, we're back over 531, so that's good. That means that we're at least neutral. See how fast they go through these levels. This is crazy. It's just crazy, but this is real. Unless we're over 538.71, I just have a hard time getting to be net long. I think, the market can chop up to there, but unless we're closing over that, I have a tough time. It's good that we're closing over 528 because that means that we're at least neutral. But for now, I'm feeling like, is this live? It's feeling like we get here. What we don't want to see is we don't want to see sometime this week open below 528 because that's just going to bring us right back to these lows. And the real one that I need to watch out for, or that if you're an investor, not investor. If you're an investor, this is what you're looking for. You're looking for like a day to open on SPY below like 510, something like that. And you're looking for this to be a big buy because this area, that's a buy for sure. And I have this really weird feeling that the chart's telling me that this is very much in play. It really is. But when is it in play? It might not be till like late August. And we have a couple other catalysts coming up on deck. So we have Jackson Hole later this month, at the end of this month. That's a big thing. That's when the Fed comes out and talks about their broad policy. I have this feeling we're probably going to be choppy, range-bound price action until then, till just before then, which might end up being like a little bit of a rally, specifically in the small caps for like an anticipation of rate cut rhetoric. And then potentially a sell then use event right into September, and that'll probably be the lows. And so that this might not happen for a while, but it's very much on. Look, this chart, you should know it's very much. It looks possible. I'm gonna hide these levels for just a minute. Where is this? I got one that's stuck. I don't know where this is coming from. We'll hide it for just a minute. But this is where we are. So this is that broken uptrend on SPY, long-term uptrend since the lows in October, November of last year, late October. So uptrend here, broken, right? That's gone. We can kind of take that away. Let me just hide this for a minute. But now we have this downtrend, and this prevailing downtrend, we've just kind of like rallied up to it. And it looks like right now we're rejecting. So that's what has me really concerned up here. This is definitely going to be overhead resistance, if that makes sense. This is not like, major black swan. We'll talk about a couple other things. Like we could talk about the yen carry trade, that kind of stuff. Nonsense, maybe not. This liquid right now is war news. Yeah. So there's the trifecta, right? So we have the yen carry trade. We have geopolitical concerns right now. That's a big thing. And, we have basically, a lot of like recessionary type fears. I'll tell you right now, I'm not in the recession camp. I think that we might be in if you're not familiar with the types of markets, let me see if I can pull this up too. There are four essentially. A lot of times people call them quadrants, and I'm going to take something that I use from hedge here. If you don't know what hedge is, it's they're not bad, but they have essentially. Oh, that's really bad quality. Sorry, let me see if I have something better. Nope, that's not better at all. Essentially, like four quadrants, and I might have another slide. We can go through it later, but there's Goldilocks here that we talked about earlier. That's 2% inflation, 2% GDP. We have quad two reflation that we're just definitively coming out of, and that the best asset classes there, commodities, equities, credit, things like that. Worst asset class, fixed income. So that's your long bonds, things like that. What went down? Long bonds did. Best equities, tech, consumer discretionary, industrials, energy, financial. That's good, right? What underperformed? Telecom, utilities, REITs, consumer staples, healthcare. Those have all been underperforming for a very long time. I think we're coming out of this. The question here, and for most people, legitimately, the question is, are we going into stagflation or deflation? Right. And I think it's just deflation for a little bit. And you've seen a lot of this happen. So fixed income, gold, bonds start to go up, gold going up. The problem here is the USD. So we have some funky headwinds. FOMC level strong as our FOMC level, not even close. Nothing holds the weight like an NFP level. Nothing. I mean, nothing. So consumer staples do well. Utilities do well. REITs, healthcare. What's been going up? Right. So all of this stuff, you're starting to see what people might be calling like a rotation into value. But that is because really, I think that we're actually in this more deflation. If Frank's here, Uncle Frank, he's going to say that, hey, we're in stagflation. Stagflation means the difference between these two is all about the CPI, right? The difference between deflation and stagflation is whether or not this inflation number is super sticky. And so if GDP is coming down, that's fine, or leveling out somewhere around 2%. But inflation doesn't go down at all. Well, that's stagflation. That's stagflation. If inflation is coming down and we're starting to level out and we're on our way to Goldilocks, well, this is deflation, and this is good. And this is a typical kind of rotation that we're starting to see, right? Low beta, high dividend quality, defensives, and value. What's been moving lately, right? In this last month or so. What I'll say is, like, what's also true is that there's always going to be an appetite for growth. So the thing about AI, stuff like that, I still think that all holds value. But when you look around the market and you think about why are certain things going certain ways, it's because inflation's coming down. This is deflation to me. You can have your macro arguments about it one way or the other, but you know what? The truth is, what we see performing the best right now: high dividend, high yield, quality, defensives, value, staples, utilities, healthcare. That's all doing better, better than QQQ for a little bit. And it's until that really changes, we'll see a little bit of that. So on to the headlines, man. So ISM services, by the way, this came out last week, coming in estimates 51.4 is where we actually came in. This is better than prior. So that it wasn't a huge difference from the estimates, but so it didn't move the market a whole lot, but definitely better than prior. It's definite improvement. The one that's like kind of got me I looked at this when it happened. I was just like, this is crazy. The initial jobless claims, first of all, last month, we didn't have really any like real economic data. So I feel like the market was just kind of like jonesing for something. But jobless claims coming in on Thursday, I mean, super under, like, okay, there's this level. And if I can find it, it's about 235. And you can, last week it came in at 233. So I'm looking off to the screen to another chart, and let me just pull this up. Let me see 3-year. I think it's about 230s, something like that. 230s ends up being like a bit of a pivot level. Yeah, I'm having a hard time pulling this data. That looks really, really good. What about 230? So we came in. So what this is that the jobless claims, so people filing for unemployment, new unemployment filings, this is low. Um, yeah. So if it's low, then here's the question, right? If the whole market's kind of moving around, oh, is that Frankie? Frankie, I am concerned about stagflation, but oh yeah, so this is where we are on that stagflation. But no, there's but not there, and it's macro. I have no clue macro. So this is true. Macro opinions can crush you when trading. That's definitively true. So Frankie coming in with his wisdom right there. It's really hard. It's really hard if you have an opinion from a macro perspective. Like if you really think that we're going into a recession, I mean, you would think that you'd want to be net short, but you would be getting crushed if you've been net short. So it's a tough one. But let me go back to this jobless claims number for a second. So the market wants a rate cut. The rate cut, when it comes, may likely be a sell the news event. We can take a look at that. I have some charts that we were doing in the server just the other day. I think last week we were playing around with it. And you know, if the jobless claims are higher and inflation rate cuts, they would cut rates if inflation, basically if there was a problem, right? If inflation's coming down too fast, they would actually cut rates. As weird as that sounds. So inflation is all about velocity of dollars, if you're not familiar with that. So if people are not spending money, then business owners and the like are going to lower their prices to incentivize people to spend more. Does that make sense? So if you're not spending money, then prices will come down because the businesses need to sell things. So they're going to drop their prices. If you're spending a lot of money, then it's not like they're going to keep the prices the same, guys. They're going to raise their prices because they can, right? So if you're spending a lot more money, then prices go up, and that's inflation, right? And so the question about this jobs thing is if more people are filing for unemployment, then therefore inflation would be coming down because there's less of like the consumer has less money. That goes back to that non-farm payroll number, why that's so important. That's how many new jobs were taken. This is how many claims for unemployment were filed. If this comes down, that means that the market's doing good. And if the market's doing good, the counteract to that is, well, GDP is going up. So this is this constant push pull that we're having. So it's going to get choppy, man. It's going to get really choppy. Is TLT or TMF a good hedge in this market? No, TMF is a leverage ticker. I wouldn't say it's a hedge, but I think that something like TLT deserves an allocation definitively now. I don't think it goes up, but I think TLT and gold probably deserve an allocation. They don't need to be like anything major, but if you don't have it, this is probably the time. Look, what we can agree on, I believe we can all agree on that rates have pretty much peaked out. And TLT specifically, or any other bond out there, as rates go up, then the value of the bond itself goes down. So if you my old thing is like, okay, so here's like a notepad, right? So like if this notepad is my bond, right? So like here's a notepad. Frank wants a 10-year bond. I'm going to take one out. I issue it to him, but he pays me for this piece of paper. This piece of paper costs, let's say $100 and to acquire. And as they own it, it will pay you an interest rate, an annualized interest rate, say 5%. So I pay $100 for this piece of paper. I own it. I collect 5% a year, and that's how it works. If it costs less, and then at the end of the year, it'd be 105. If I get a lower coupon, they call it like a lower rate on my bond. Like if this is paying out less, I believe, then this costs more, right? So if it's I get 2%, then maybe this piece of paper costs me $103. And then I get 2% over the course of the year. I still net out 105. If this is making sense. And if it's like 1%, okay, maybe this paper cost me $104 and I get $1 interest over the next year and I net out 105. But in that example, this is what's true. This paper becomes a trading vehicle. And that's what you're looking at on TLT. So if you see the yields going down, well, that means that the paper, I don't know if I'm using the right word, but the bond that you own, the value of it will go up. So you can sell it back. And if you bought it when it was yielding like a crazy high amount, and I bought it for $100, I could turn around and I've only collected a couple percent. I could turn around and sell it right now, boom. And I'd still end up making my 105 or whatever it is at the end of the transaction. So that's kind of how it works. Last week, you shorted into SMCI. What do you think about Out of the Woods? SMCI, we'll talk about this in a little bit. We have some catalysts on watch. I believe tomorrow they're starting like a 3-week long event. So we'll see. It's a storage event, I believe, though. So it might not be a huge thing. We should talk a little bit about this carry trade. I think that was the fuel that lit the fire. Maybe a little fire that was already burning. It just exploded that for sure. Last I checked, I believe JP Morgan said they're about 75% unwound. So I don't think this becomes a huge headwind anymore. Like if this is mostly done, that's good. I don't know that the stocks are out of the woods yet. Bonds are back as a hedge after failing investors for years. So I think that, maybe what DK was talking about, is it a hedge? Yeah, it's a hedge, but it's not like the greatest hedge. And I wouldn't say it's for long-term investors. So to me, it deserves a small allocation, right? At least something in long term, right? You're going to get a decent entry here. And then back to this like geopolitical stuff. Israel keeps up strikes in Gaza's fears of wider war grow. This was a headline, I think, on a couple different places. Iran could attack Israel in less than 24 hours. This is from Fox. I mean, it's getting wild, right? So that's happening. We got oil flying around. We got gold possibly moving. Dollars like at this critical level. If you don't know, that's falling off. VIX is at 65 and it's crazy. In the meantime, we have stuff like this, like Scotia Bank to buy 14.9% equity in KeyCorp. The KeyCorp was up massive. This is regional banks, right? So there's still a lot of this, I think, going on. And net, I think in general, the thesis stays like we're probably going up. But the question is, are we done going down? And is it time to get like ultra long? I don't know just yet. It's on edge. I think that, when you look at the market, and I'm going to pull up another chart real quick. This is SPY. And we have 3 big, nasty red candles in a row. It's not typical that you have a lot of follow through. This fourth one was crazy red for a while. But this right here, this is typical seasonality. So this is July, end of July last year. So I would say hone in on this moment of SPY last year, and we might be seeing something like this. And so in this case, you have 1, 2, 3 down, 1, 2 up, 1, 2, 3 down, flat, slightly up, 2 down. That's it. This is October. So this is possible that we see something like this. I just don't know that we have like 3 waves of it. I think that's really what's in question. And if you were trading around this time last year, this is, the inside these weekly candles, the whipsaws can get really crazy. I told you guys we would look at, is this gone? I thought I had this on the charts. If I don't have it, then I'm not going to go through it. But I was going to look at what does the rate cut scenario look like? See if I have this on any of my charts. I might not have it anymore. No, I don't have it. Well, what I'll say is like a rate cut scenario. I believe this is a rate cut scenario. looks a bit like this, where you're gearing up into rate cuts. I think 2018, 2019, like choppy, like this. Actually, I think this is actual. Yeah, August 19th, this is actual rate cut scenario. So you get this run up, then rates actually get cut. It's a sell the news slightly, but they end up getting bought after a while, but it ends up being pretty choppy. I think that is accurate, actually. Man, I wish I had that on my chart. I don't know where that went. Sorry about that. Anyways, let's get to the rest of this. If you guys have tickers, I ran, Frankie. If you guys have tickers, go ahead and throw them in the chat now. I'm gonna get through the rest of this week's plan, and see where that kind of leaves us. So for the rest of the week, today we really didn't have much, but data comes in hot and heavy starting tomorrow. You guys saw what the market did on Thursday of last week, just on that little piece of labor data. I've never seen a jobless claims report move the market like that. It's just been insane. So to think that it won't happen again, and to think that the market's not like, chomping at the bit at every little piece of data that they can get, it would be crazy, right? Because we haven't had a lot of data for a while. We're finally getting some. And it really kicks off tomorrow. Typically, we get PPI after CPI. I'll tell you guys right now, to me, I think the market's starting to figure out that PPI is a bit more of a forward-looking indicator than CPI, which is encouraging. But, still the market's favorite data point in terms of economic data is CPI. So the market legitimately, it just views CPI as the most important one. To me, you guys know the most important one, non-farm payrolls, is the most forward-looking. CPI is the most backward-looking. It is what has already happened, and the output from the last month's data. PPI, Producer Price Index, that's a little bit more forward-looking. And then you get a Bostic speech tomorrow. So PPI tomorrow, then we get CPI. Retail sales, not typically a market-moving event, but again, because we're talking about, the CPI and like where inflation is going, and the jobless number, I mean, we'll see. The jobless claims, look, if we have higher claims, the jobless claims should really put a lot of those recession like noises down, right? And that's that because the jobless claims number last week was so light. I think a lot of that recession argument really needed to get thrown out. Like, you don't have light jobless claims like that in a recession. You have like 250 plus typically. So if you see a number for Thursday, 250 or higher, then the market's probably going to tank, because it's like, okay, recession fears are, I would say normally the market's going to tank because like, okay, recession fears are on again. But at the same time, it probably will be the last one to last fall, because then rate cuts are coming, right? And Powell's going to save the day. So it's a little push pull. We're all over the place right now. Just know that's seasonal choppy trend. That's what we should be expecting for sure. And then Friday, not really a whole lot. Sentiment, housing stats and sentiment. I appreciate you guys dropping the tickers in there. So I'm gonna run through the rest of this, and then I got Miss Cleo behind us too. So we got to get Miss Cleo. She's up. Let's see this. What's on deck? So this week we're in the meat of it. I think Home Depot is going to be important. Probably not a big mover. Some people in C Limited. Did you guys see Mara this morning? By the way, so we're talking about the Bitcoin miners. This is what I'm talking about. The dilution is crazy. Clean Spark, yes, printing money, but dude, it's down 50%. Like, I just can't get behind it. Sorry. Intel, let's see who else is here. Do we have anybody big? Cisco's interesting, but it's like worse than Adele in terms of like, it's a massive company and the market really doesn't understand it. But honestly, most of Cisco's business is in switching, not in AI edge. They do have it though. They're like probably like number 2, or they're way up there. But the rest of their business units are so big. Yeah, you pinged me. Yeah, I believe it. Oye, on the Clean Spark, was that you on the Clean Spark? Yeah, I just can't get behind it, right? Like, it's like, I get it. Like, I agree. I don't disagree that like some of these are like theoretically like really good, but at the end of the day, they're miners, and the market has to get behind them. Yeah. Cardinal Health might be interesting. I'm not seeing a whole Stoneco. That's old school. Nice. Let's see. So I think it's Walmart, Home Depot, Cisco, and Walmart. I thought we had another one. AMAT. Do we have AMAT? Well, Applied Materials Thursday after close. That's the biggest semi right here reporting. I was looking last week to see if AMAT could catch a bid or have a little up skis ahead of earnings. I think they will. As an aside, I think AMAT's in a really interesting spot today, actually, just getting over its 200-day simple moving average. The problem with options here is that you're going to have to pay up heavily for like any kind of like option play there. So maybe just equity. We'll see. Qualcomm got a downgrade today too in the semi space. But this was down like 35 something percent from the highs. Now it's sitting about 25% down. I don't know. I don't know that this business has really changed that much. This one looks more interesting to me. Really like holding this 187 level and the 200-day. But look, when earnings hit, all this technical, schmectical stuff, that's nonsense. It's not going to matter. JD.com. Yeah, I think it's Walmart, Cisco, Applied Materials, and we at Home Depot. Is Jackson Hole a big event this year for stocks? Where's Frankie? Is Frankie still here? Jackson Hole is going to be a big event. Jackson Hole, it's the end of the month. I think it's like 24th. It's a big deal. It's going to be a big deal for sure. And yes, the market went absolutely bonkers last year. So if you remember trading Jackson Hole or the pivots around Jackson Hole, I think it's really, you have to be aware of that. It could be Jackson Hole that takes another leg down. Who knows? But my gut is like kind of a little bit rally into it and then sell the news. Sell the news is like, yeah, Jackson Hole. It's going to be, Frankie's is going to be a big deal. This guy, 50 years, something experience. Yeah. And Nvidia earnings as well. If you didn't see the cover of today's broadcast, the reason why it's the big Nvidia AI machine is because also at the same time, you got Nvidia here, right? So can Nvidia pick the market up? It's all there, right? So we have the makings of some serious chop. That's definitively what's true. But anyways, let's get to it. I got Miss Cleo in the background. Here she Did that go so fast? That went too fast. anyways, this is the forecast. This is the reading for the day. Here we go. Everybody's moment that we've been waiting for. What is Miss Cleo gonna say? She's been on fire, dude. Like absolutely fire. That's all I can tell you. She's been calling this stuff left and right, up, down, all over the place. So I know nothing about these cards. This looks like 4 cups. I remember this one. What happens Wednesday? Was there something on Wednesday? Oh, CPI. Wheel of Fortune is what it sounds like. It's the Wheel of Fortune. It can go either way. So just know Wednesday, fireworks, get set off. That's the day, definitively. Then, I don't know. Then we end with the Queen of Cups. So we'll see. What's the rest? So theme card. Let's read this. Get over here. So theme card is the 4 of Cups. We've moved from an 8 to 4, which came after the Queen of Coin a few weeks ago. It feels like markets are telling me it wants to continue in the general trend, which has been down. That's kind of my sentiment, my gut. This makes sense given the fact that this card brings apathy. Usually after a bit of mean reversion. Also, what we're getting. So, something is taken out of reach. Oh, something is taken out of reach. That doesn't sound good. and we're losing interest in the opportunities that remain. What? That's really bad. Strangely, this card is bullish historically, so I'm not sure that matters though, since last week's general energy was positive. Still, we need to rely on the daily card, so let's take a look. All right, so she wrote like a freaking essay this week, you guys. I'm just gonna let me try to run through this. I'm gonna skip today. Let's see what she's. It's got a few Mondays ago. It led to a green day that bought dips and sold rallies. I will say the price action so far is trying to be similar to last Thursday, but not as serious. So what I'm saying is that right now I am seeing the dips get bought. I'm also seeing the rips get sold. Buy the dip, sell the rip. We're seeing both of that today. We're going to end up flat. We're not going anywhere, so don't worry, you're not missing anything. At least not to the very last half hour or so of the close. Don't get caught trying to get cute. Chasing a big move is probably too late to make it burn. Long deposit carry. Yeah. I'm still seriously thinking that into Jackson Hole at the end of the month. Tuesday, 8 of Cups, 888. You know what's likely more likely here? Stagnation. So she's saying take tomorrow off. I think this also fits the theme card, something to keep in mind. We had this card last Friday and it gave us a lot of chop, feeling like a big move was stirring, but ultimately failing to manifest worth a close. OPEX week. Miss Cleo thinks OPEX week is a thing. I'm going to tell you guys right now, it's not a thing. After all, so chop and boredom are standard operating procedure, blah, blah. Note that this card accompanies changing moon cycle, but nothing of that sort here other than a first quarter moon. Oh, now she's talking about, where's Sharky when you need him? Talking about moon cycles. So Tuesday, Cleo says chop. Wednesday's the big day-to-day. Wheel of Fortune. Wednesdays are known for pivots, especially during OPEX week. Sure. So it looks like we're going to get a chance in. Do you guys believe in this OPEX stuff? This is I've seen a couple posts this, but I'm not a big believer. Maybe I'm wrong. I don't know. But I think the sentiment is like OPEX in general. People think that the market just goes sideways. What I know is true definitively is that premiums get messed up, and especially on that Friday, a lot of the bid-ask spreads are pretty wide sometimes. So it looks like we're changing energy this Wednesday too. Both of the prior days cards are historically negative, but this is usually positive. The Wheel of Fortune is usually positive. Okay, so that's another clue. There's a 75% chance of mean reversion. Where did she get this? I don't know. So play those odds and look for a possible change in energy for the rest of the week. That said, card does not usually trend. It's just a one-day thing, meaning the move may change directions, but it may not be a large one. It takes a long while to steer a ship in the opposite direction. This means to play reversals if it arrives, but don't get greedy. Take profit early. Yeah, just what I'd say is, use that NFP stuff. Right now, we are definitively in a chop zone. If we're below, what I say was, if we're below that first Friday of the month's low, which is 528.60, just we're going down. We're going down. If we're below 528.60 on Wednesday, we're going down, and we're probably going to see 520 for sure. But if we're over 538, we're going up definitively, and we're probably going up all the way to 550. Believe that. Those aren't small ranges that I just said, but if you want to take a pencil out and note it, that's what it is. Anyways, that said, this card does not usually this means play a reversal if it arrives, but don't get greedy. Take profit early. Okay. She has no idea. She has no idea. 7 of Wands, crazy eights, wheel 7. That sounds about right. This card tells us expect sudden selling out of nowhere. So if we run too far, too fast Wednesday, it's going to reverse Thursday, is what Cleo's saying. I believe that. It can either happen short while into a cast session either, or gap. We'll be surprised. So don't swing trend Wednesday. Our defenses should be successful as this card is often finishes flat. However, I would not chase this deep into the red. It trends 15% of the time, so not just down but up as well. Okay, that's a very low That's not a good percentage. This means if we show strength, sell, and recover quickly, the rally should continue. If we show strength, sell, and then recover quickly, early trade, then the rally should continue. Okay. If selling cuts deeper than normal, I would not try to buy the dip. Sell. Right? Selling is small and feels fake, then it probably is. We can try a quick dip, but in general, sell rallies. Don't buy dips unless it's for a quicker move. I can buy that. I'm down with that. I like that. On Friday, we get the Queen of Cups. We don't have a lot of history, but her MO is that she appears when we need support and feel emotional about our current situation. This often implies fear or panic. Had 8 cups last Friday, gave us chop with both rallies and dips that ultimately led nowhere. Could see something similar here, but with more firepower. Okay. That was like today, definite firepower in both directions. But we're just chopping in the middle right now. Ton of blue in the cards this week. We see it pretty much every day, but Wednesday, if you see that Monday, Tuesday, Thursday, we have similar blue. Okay. Then expect this tarot stuff, man. It blows my mind. Then expect the same for Friday. Otherwise, that pattern is busted. Lastly, this card often mean reverts. So if we open in the opposite direction of Thursday's close, dude, this is choppy. It has a high chance of sticking. I know this is a tough one to follow. So we're not on swing trading yet. Don't be afraid to walk away and return for after OPEX week. A lot of money is invested in the open. Okay. Manipulations. This is, it's not like manipulations. It cracks me up, this OPEX thing, man. People are like, oh, the boogeyman, market maker. They're not out to get you, dude. This is not, it's not how it works. Anyways, recap. Personal rule again, especially the options chart. The card suggests this is probably a good take. We have chop Monday, Tuesday, possibly mean reversion Wednesday and Friday. Thursday, play defense. So she's thinking Thursday. If we pop on Wednesday, fade it into Thursday, cool. And then that's probably it for the week's move, is what she's saying. Basically call in one day. I can actually get behind it. So there you have it. That's what it is. Let's get into it. Miss Cleo says, could go up, could go down, but that's just me. That's exactly what we got. Oh, bother. Yeah. What's up, Ava? You guys rock. And guess what? We've gone nowhere since this broadcast has started. Thank you. I'm just telling you guys, we're probably not going to go anywhere right now. That might be it. So, all right, enjoy your weeks. We'll see you on Wednesday into Thursday. But let's get into this. You guys got a couple here. This is, yeah. So August 24th, 22nd, 24th is Jackson Hole. That is accurate, I believe. So thank you for that. KRE. Yeah. And so like the trade might be regional banks long into the event, and then close just before. Let's see. Okay. And then you guys had sent, I know I saw a bunch of tickers. Oh, you guys, I was like, Frankie, Iran is not a ticker. Oh, that's not okay. All right. Let's get to this. Let me click over here. So Nvidia actually of all the stocks I'm looking at, I'm gonna be like, okay, this makes sense. This makes the most sense for Nvidia. So I do have multi-hour, multi-time frame view on Nvidia, but this is a pretty solid base here for Nvidia. What we want to see, so this gap, this is 110. So to me, my initial trade was short 122 down to 110 to fill this gap. I didn't see this whole thing coming, but this has been ultra choppy in between. And I think, now just this little, if this is a daily, we're heading into earnings in about 2 weeks. And what I always told you guys, the pre-earnings run up typically starts about 2 weeks before the actual report. That's about now. So to see a little bit of a bounce to the upside on Nvidia makes a lot of sense to me. 110 definitively going to be a trigger. 105 is an ideal spot to pick it up. That's where she was this morning though, so that's kind of gone. Your next stops here 114. And then I would actually say, let's do this. Let's get really into this. If you get over 109, what happens is that you start to get this. We're back into this big flush area. And I'm moving the viewing like what part of the chart we can see over just a little bit, and pay attention to this volume shelf, this price like visual volume right here on the right hand side. So right here, this happens to be, I'm just gonna take the right where that shelf's kind of like disappears, and then you see all this kind of like low volume area. What we call this a low volume pocket, and that low volume pocket actually comes all the way up to here. There's a little bit of a stutter step here, so 110 to 115 for sure. I'm gonna put this out there. When I see a big, this area here creates what we call a fair value gap. And I'm just gonna zoom in on this day. So this day is the 1st of August. So very low volume here. This goes all the way up to 117. And I'm just gonna grab one little block. And so what I'm doing is I'm gonna take the high and the low before, like the low before the high is technically this, but I'm gonna take the bottom of this candle right here, 118 and change. I'm gonna call that a fair value gap, 118.58. See if I can nail that down a little bit tighter. I'm gonna take the bottom. Yeah, I'm taking the bottom of that top wick candle. This is just a 5. It doesn't really matter. But see how what happens a lot is when you have these areas, you get this like topping formation, and it looks like it starts to flush, but it'll price tends to come right back into this area, right? And so what I'm doing is I'm looking for where's this type of wick gonna be to possibly short, and that would be like up to 119.20. The way this works, if I did the same kind of thing over here, that would have been right there, 120, and you would have caught it right there. So I'm going to do that kind of exercise here on this candle here. This is 119.22. So I think for a full-blown like pre-earnings run up, I think that's where you could go. That's going to line up right into the 50-day, just below the 50-day. I think that's good, but I would say this is like possibly 2 weeks to happen. So in the meantime, if you see it around that 105, that might be a better buy. 106 and change. Call this your price of interest. 106.24. I think that can be pretty specific for you. 106.24. So if you see this pull back at some point, that's the trade I would really take, like that. Otherwise, you can it has to be day trade, intraday, like one little bite, 2 little bites. That's it. Meta, for I have options. We call it meta. So Meta, man, has fallen out of this like larger uptrend. So she's out of it. She kind of retested the top of the broken uptrend, failing. And when you do this, take a look at what I just did a little bit ago and watch how crazy this works. So if I take that same kind of area, I'm going to grab that. That's 525 spot 30. Let me take this green box off. But to find the exact kind of thing, I'm taking the very top wick and the bottom of that candle. 525 spot 30. Let's see where she stopped. Really close. So maybe a little bit more upside, but not a lot. I think she's in a range. I'll say she's definitively in the range. And if you're not even looking at that, that's probably right there. Yeah, from where this really big one happened. But I think this is sell calls type area for Meta around the 530s. What's also true is that when you look at it at a larger time frame, so here's the daily. So Meta here it's in a box, right? Technically, Meta has gone nowhere. And if you don't have this view, it's how many days is this? 193 days. Meta's really gone nowhere. So I would say play the edges with Meta. This is the range that it's in, right? It's around 530. Even this, like if this was that little blip, you basically hit it 527. I think you're at the top of the range. I would be more seller of calls around the 530, 535. If you want to get really aggressive and defend a position, it'd be like 500s. But I feel like your better buys are in this lower liquidity sub 500. That makes sense. So it's not a short necessarily because it's still technically going up, but it's not exactly a long. If she closes at the lows, it becomes a short. But I think Meta's one where you can look at it. This might be a short. Okay, this is probably short. Today, if you close below this pre-market level, so this I'm going to call pre-market low. It's probably short. If it closes below the pre-market low today, it's not going up, right? And you close below yesterday's high, you're likely going to. That's a lot. That's like 505. 505 near term. You fill this. This actually looks like a short for the week, not like long-term short. But I think long-term, you're in that box. So it's better to pick up near 470s, 480s. And then if it gets too high too fast, earnings are behind us. We have a lot of macro to deal with. It's not the right time to break out. So it might be a little too far. This looks very toppy though. What would trigger to go upside is if you get open above 520 and you extend upside in early trade. So in the first like hour and a half. Oh man, when do you think 3M is gonna go, dude? So 3M is in the value bucket, right? So I am getting really tired of 3M right now. I will tell you that. I don't think it's gonna go down. It's been very like strong, but it's pretty much near my stops. I might close her out today because what I didn't want to see, I gave her a few days. I gave her a whole week. I wanted to see last week close above. What was it? 124, and she closed on it. This week we're opening below 124, so it's had a big move. Maybe it wants a couple more weeks of rest, and I don't really want to be sitting chilling in options. Not that they're going to lose a lot of money or like whatever, but it might mean that like in the lower liquidity area here, that might be a better buy. Like $5-6 lower. So that's where I'm at right now. It was this 124. I needed to see like the weekly closing above. We basically closed on it last week, and this week we're starting to open below. I'll give it a little bit, but I don't want to give it a whole lot more, if that makes sense, because volatility is going to be decaying here pretty rapidly. I just don't want to see that. Ideally, this is a higher low today. But if it's not tomorrow, it's from an options perspective, it's got to be exit stage left. Tessie. So Tesla, I think is an important one. Weekly, I want to take a quick look at the weekly on Tesla. So all these simple moving averages are getting really tight. The whole chart is really tight, but it looks like it's gone nowhere. We still have the Robotaxi event to look forward to, 10/10. But guys, that's not for 2 months out. I think that this, in theory, this builds a base. I say theory, but it can't be going any lower than like this 185 was. That was not cool. The 200-day simple moving average is this red line right here. This has gotta reclaim it. Right now it's toying with it. It's a tough one, right? This is a tough one. I don't know that she's ready. I don't know that it's ready. I don't know that it's going to dump. What I will say is if this level here gets lost, this ain't saving it, right? Because anybody that was buying here, I mean, at this point, they might, at this point, they probably still have it if you bought here, because that was such a big move. And you'd be like, oh, it's going to go back. But if it starts to lose this, these buyers aren't going to stick around. I'll just say that. Like, I don't believe that these buyers are going to stick around at all. I think that you have to go to like 125s, or like definitely 150s. If there's an attempt to jump at this liquidity again, I am just like, look, the car people they're like, oh, it's trading like a car. It is what it is. I think if you have a long enough perspective, you should just be buying on big dips. But I'm not selling. I'm just saying, like, not my equity, but from an options perspective and a trade perspective, it's got to get over this hump right now. It's got to get over. So 203 is really the big deal level. That's the 200-day simple moving average. You're building a base if you want to be like somewhat constructive, but at the same time, you also want to be realistic. This can easily break down, and the bears would be like, "Oh, you're about to break down," right? But for now, this is kind of like your, let's say, call it wedge, if you will. I don't have those fancy shapes. Do I have a fancy shape? I don't know. You're like, here's your, it's in here, right? This is your little wedge that you're dealing with for your shape people. This is your wedge. This could be consolidating for a while until it gets to like really like peak like pressure. And then honestly, typically this kind of stuff ends up playing out like this. It ends up actually breaking upside and then coming down. So I think you see something like this, but it's still more or less range bound. If you get like this, that's no good, right? This situation, one quick bounce up through, and then an immediate pull back into, and then rejection at this 206. 206 is crucial. He's going down, right? And this is probably not going to save it. That's the worst case scenario. All right. But to me, I'm still thinking constructive just because we have the robo taxi. Did you really say Jumia? No, I know you're laughing at it. Amazon Africa. I know it's $2, right? Oh no. Yeah, this is, I mean, come on. This is what happens. You have a 14 guys. Oh, that's hilarious. This fell 70% in less than a month. Typical Jumia. That's why it was always a sketchy one, man. Always a sketchy one. $3. That's what you look for if you want to buy it. $3, man. Right in there. The lower liquidity. I have no idea what happened, but it's not Amazon. It's not real Amazon. We did Meta, Tesla. Speaking of Amazon, we can do Amazon really quick. Actually, let me cherry pick here. We can do Amazon. So Amazon, this is the area that you're sitting in right now. You're under the 200-day. This looks like a giant bear flag to me, like as in not up skis. It looks more like down skis because this one's more like breaking. If it just falls out, it's going to be short term. So the thing about these, let's say patterns, they don't always like flush like this. A lot of times what happens is that they do like this really weird dip to about half of it and then stop. And then they just kind of like chop for a bit and end up going back up. So 160 is that lower end off this. I would say 160 is your actual target on what looks like a very long and drawn out, what they would call bear flag. I wouldn't buy that whole storyline. I would actually just look for this 160 level as a point to like maybe do these buyers jump back in? And I think probably they will. If you get over that 170, that's a big pivot. It's really got to be like well over 170. You should be seeing 175 quickly. And hopefully back to 200 at some point so that Bezos can start selling into us again. But yeah, I'd be a buyer on dips here. I'd be a definite buyer. I guess it's got to be around this 145 level now at this point to be real. 145 has a lot of confluence. 141, sorry. So from the lows to the highs, 52-week lows, 52-week highs, 140 is actually the halfway point right there. of this entire thing. I don't think that Amazon drops below this by any means. Do I need to buy it here now? No, I don't. It's not like the greatest look, to be fair. It's not a good look for the stock. If you think it's going upside, I would either wait for this to get over 175 again and then use 170 as like your baseline stop. But it's not an uptrend. This is like retesting the failure of the downtrend. So either you got it at 150 the other day or you get another shot at 140 later. That's what that looks like. SMCI, I did say something about SMCI. So that downside target has hit for SMCI for me. Now, just because something hits a downside target doesn't mean that it's immediately going to go up. This one for right now, it's a small bounce. Like, yeah, it went up a little bit. It went up actually a lot from like 500, 480 to like 560 this morning. But so for a trend to hold, even if this is the higher high, now what do you want to see a lower low or a higher low get locked in? So this is this current order block right here. This is about 529. So it's basically here. This is Thursday's high. So if last Thursday's high can hold and you see it start to base out, that would be ideal for like reclaiming. And I would say back to that 600 level. So if you can catch a higher low around 530, I think that's fine. You have to be aware that there's a possibility that it's not going to hold. And so this is 592. It's not above that. You can't. So your stop has to be 503. So if you're going to grab this at 529, you got to have a stop at 503. From an equity perspective, options, different deal. It's a much tighter stop. Options would have to be more like way over here. 523. You could probably use that actually as a stop if you want to pick it up in this area, which actually makes this like a little box to look into. So that's between 529 and 522. If you see it kind of basing, you see like a double bottom in here, that might be ideal. Rivian, I sold some more Rivian. So Rivian, I don't think goes. Rivian's going to base out around 13 to me. So this, JR needed to say, hey, look, we're going to make a bunch of money, more money on, what was it? On the cars, the new cars that we're selling. He didn't say that. So, so this isn't going to take off. It's his fault. Blame him. He's the problem. I'm joking. But it's right in here. This kind of area becomes kind of like that support. This is about $12 actually. I think you could sell some aggressive cover calls here if you wanted to. So take this high to low. That's about $12 is where she should probably go to. And that should hold as a low near term and then continue on like it's the upside. It's not a big difference. It's $1.40 from here to there. So like accumulation in that area. But I don't think this falls out of bed unless there's some event where he's like, hey, look, we're now looking for a bunch of like, we're now going to dilute our current shareholders. And this thing's going to dump. Because a lot of the idea behind this rally here now, was like the part of the deal that was like really good is like he didn't dilute, right? So up here they diluted, right? This was a big dilution event right here when they're raising capital. They did that. This was a different kind of deal where they did something different. So hopefully that holds. That has to hold. SoFi Palantir will hold for a minute tomorrow in the afternoon. I don't know what COI is. No idea what this is. It's a REIT. Unless I did the wrong ticker. I think he meant coin. It's probably going to be coin. Oh, there it is. Yeah. So Coinbase is here. So we need to see this kind of breakout. This is a failed breakout for sure. What we need to, if you're going to do coin, what we're going to do is we're going to do Bitcoin. And this is not a good look for Bitcoin, boys and girls. This is short. Do you know that? I'm pretty sure it's a short. I'm pretty sure this recent low doesn't hold. Some people ask me if I bought this dip. No, I didn't. The reason I didn't is very simple. And we did this in our server earlier. When this was happening and we saw this kind of bounce happening, my problem with this was that, hey, look, definitively, here's your last high, right? And this is how crypto works. It's very technical. It leans very heavy on technicals. So low, so high, low, lower low, lower high, and double top, right? You can't really deny that. This double top is a lower high, and then you proceed to get a lower low, since this is your last low. So the next thing that we were expecting was a big fat lower high. And where would a lower high show up, by the way? It was going to show up right here, 69,280, right? Up to in this box, doing that same kind of exercise right in here, most likely right here, 69 and change, like right there, 69.2, 69.2. Watch this. So we bounce, looks good. You're like right there, pretty sure. Boom. Ta-da. That was it. Literally this, right? One more lower high. So now you definitively have lower low, lower high, lower low, lower high. Believe what you want. It's still in consolidation, but this completes like the I caramba. That's the Bart Simpson, right? Fade. And that is where it is, boys and girls. So we saw this coming. I think that we're just continuing on with the same. So really, like this 200-day here, this area failing here was definitely looking short. Anything up in here is short, but it's crypto, right? So what does that mean? That means that this whole thing can look like this. It can actually get all the way back up there, and that ends up being a better short. So just be aware. Right now, it doesn't look like a long, but it can get back. And so like that ends up being another 70K. You got to be short again, 69. Because this is consolidation event. I think this goes one more time to like this, right? I think we look like something like that. Just when you think it looks all good, then they pull the rug out from underneath you, and that's like 45. And this, whatever this next dip is, the next big dip wasn't last weekend. The next big one, which might be this weekend because it tends to happen on Saturday nights, is the one that I would say, okay, we load her up, but not yet. No, I'm not feeling that just yet. So it's going to be similar, right? Since Coinbase and the like trade something similar. Yikes, Aroni. That would be like 125. Am I crazy? 130s? Oof. But it's not too dissimilar on this coin chart at this point. So you have definitively a failed breakout, right? So what do we always say? Is this a Bart Simpson pattern on Coinbase? Is it? Does coin itself have the I caramba pattern? Wow. It does. Is a thing. I think it's similar. It could go up a little bit. But it's a better short in this area around 220s. Which might mean like a long for this week, but if you see it around 220, I'd get out the way because I think this 240 area is the next one. I don't see 220 something. That's crazy. That could happen, but best case scenario, it ends up looking kind of like this. But either way, it's kind of like this whole setup this week. Unless we're completely breaking down, if we do completely break down, okay, it'll look like this, and then we're probably done, right? Because what happens is that you have this attempted breakout, and that's really from these buyers here that were attempting. So all these guys buying, attempting to break out. So this couldn't happen. This didn't hold. So it's got to go a little bit lower, right? And the last cohort of buyers, where was it? It was down here. So it probably needs to come back to these guys a little bit one more time before it can actually go make the move. That's what I'm saying. Okay. Utilities. I can look at. You know what? Let's go to. Let me see XLU. Utilities. Yeah, these guys don't move a whole lot. This looks constructive. Again, if we're a deflationary situation, this looks constructive. I mean, monthly chart. Yeah, you're holding. That looks good. Weekly chart. And decent. Basing. I don't know. This is like on that teeter-totter. If we switch to growth, this thing's going to dump and it's going to be like the biggest head and shoulders ever. Typically, if this head and shoulders, if this was, then this would not have broken over like this. Would have really looked more like this for that to be a valid setup. Okay, Ulta. And then we're going to start moving on. Oh, God. She's ugly, man. Is this like Lulu 2.0? Because she's got too much competition with Elf or what? Ulta was like the greatest. This is like where I bought her last time, somewhere around here. This is not good. And we know Ulta's got a lot of competition. This is going down. Chelsea. It's probably a good company still. But this has to be it. Like in this area. Problem is, like, this is a weekly chart. Those are big ranges. So it's like this little tip right here. In reality, 300 is going to be your psychological level. So forget about 320 for a little bit because it's probably going to 300. I think she goes to 300. This is ahead of earnings. They've not been guiding well. Yeah, it says beat, but their guidance, they just keep saying things that are like the last CFO said some stupid shenanigans over here on that at the JPM conference. This is coming into near 300. That's what's going to happen. It's going to test this level, and then see how it goes. It's not a lot of meat on the bone between here and there, but it's just over 3, like 305s. Like 302, something like that. Here, there. So that's it's about 300, give or take, psychological level. If she's well below that, if she's trading below 300 post earnings, you got to reevaluate because this could be like a big fall from grace. Might be like Lulu 2.0. Don't want that. Then it's just better to wait because Lulu's not done. Don't look done. Crowd though. Crowd is interesting. I think Palo Alto reports soon, and that's going to catch a little bit of love. I think Palantir. Someone asked about Palantir. I seriously believe a lot of CrowdStrike investors are going to be going to Palantir because that Rule of 40 score. It puts the crowd's not going to hold that. And Palantir is going to be like one of the few that actually does. So here, 245 is the level that you need to get over to be like actually bullish. You're not really there yet. You're kind of in chop, right? So chop land here. Bring this over. You're right there. So I don't know. It could go up to here. This puts it at 245. 238 was kind of like my level. So at this point, if you start after this retest into here, 238 came from where? It was like an intraday flip. This is 245. You could get a little bit higher, but if you fail, I'd still be thinking short. If you fail around this area, so we'll do it like this. Over 245, or 47 and change, you're probably going up to like 260s. But you got to take targets just before 260s because you got a lot of people that are going to be looking at shorting this thing right in this area. So this is a key order block, 258.44. And this goes up to 27. Those are big gaps. So I think this kind of becomes more of a day trader or an event trader. But for right now, I would still leave it be because it's just going to decay. Options are going to decay on you like crazy. If you want to dip buys, I think the dip buy was around that 200s. What I'll say is like if this, we just did that other exercise on that, like what does a bear flag look like? So like if this breaks down, what you're going to be looking for is you're going to be looking for this area around 220 to hold. So if this breaks, right, and you get around 220, 215-ish holds, and then you get back over 224, that's probably good to go. And you're probably done. So you're looking for a higher low. You don't need any breakout trades at any point in the market now are super sketchy to me. Sorry. At least for long term. I think it's all too early to be thinking that long term because the downside here could be like 150. IWM, and then we'll call it. So IWM, big deal. So if this is the problem, right? We're not over 207, essentially. We've rallied back to that Friday area and started to fail. I feel like 194, 185 was going to be it. Technically, this breached, but it is IWM. You guys see all this? It's like, what? So it's got a hold in this 200, but IWM is one of those where like you don't want to take a whole lot. Like you gotta trade it when it looks kind of weak. So it'd be the same thing if these people are still around, whoever was accumulating in here, that's what it would look like. So any liquidity grab sub 200 is what I'd be looking for. Super long dated stuff. I'll just tell you guys firsthand, like these options for leaps are bleeding. Like they should be actually a lot less than they are right now. They really should. But we're looking for this still kind of breakout and base. It needs to get back over to, I mean, it's really got to be over 215 to be back in an uptrend, but at least over 207 to say it's not going down anymore. Until then, it's kind of in still a downtrend back in this consolidation because the worst thing that could happen would be like you get this, which is like way deep, 175s. Technically, that could happen. And it could still be good, but I think realistically, it'd be more like 190s realistically for a liquidity grab. But overall, this accumulation here is still valid. It's just a question of whether or not it needs to dip into this accumulation zone one more time, which would not be fun, but that's what that would look like. It would look something like that. So stay hedged a little bit. Look for that possible, possible pre-Jackson Hole type rally. Look, the Nobu boys are back. I got to get back to the market. And I'm going to call it there, boys and girls. I appreciate everybody showing up. And I'm going to see if I can connect with the Mint and see if we do something tomorrow. Otherwise, yeah, we will see you on the next one. And I'll see you guys in the servers, if not in the spaces. Cool. All right. Till next time. Adios. Appreciate you.